Watch before Monday, 9:30 a.m., SoFi, Palantir, Tesla, Nvidia, and SPY by Invest with Henry.
Video if you want to make money this week and in February. I'm going to be giving you a lot of research on how to make money. No masterclasses, no webinars, nothing. I respect your time. So let's jump right into it. Let's talk about SoFi. As you can see here on the screen, SoFi is currently trading just under $14 per share. SoFi has pulled back from $18, actually over $18, and is at the top of the Bollinger Band. And now SoFi is under the 50-day moving average. Volatility is a really good opportunity to jump in, and we have pulled back to another really good entry. The sales growth has accelerated in the third quarter over 30% year over year, and the non-lending segment is contributing more and more to that growth. I'm a long-term bull, and I'm taking a DCA approach with SoFi. I am first of all selling $14 puts on the stock right now because I think it's an incredible value to jump in.
Selling $14 puts on SoFi is good. The only issue is that the strike price is aggressive. I would only sell $14 puts if I wanted to own it at $14. If you have a smaller account, then you're probably better off selling less aggressive strikes like $13. Or if you want to participate in the upside of the stock, as an alternative structure, you can buy a call debit spread. Let's say you would go 2 to 3 months out, then you would purchase the $16 call strike and you would sell the $20 call strike. And then you would finance that by selling 2 of the $13 puts. This would allow you to own SoFi at $13 if the stock fell, and it would also allow you to participate in the upside.
Here, how SoFi had a huge bounce from $14.17, and a good entry into the stock is $14. However, you can also sell 14.5 put options for the March expiration. As it grows its platform today, SoFi has so much potential, and more members that sign up and engage, the more products that SoFi is going to sell on the back end. You see, SoFi is actually scaling and reaching real profitability. It's reported positive net income for 4 quarters now, and it's expecting that to be given at this point. Now, I also want to show you something that I was looking at, which is Anthony Noto. He is the CEO. He has 83,000 followers on Twitter. Well, we call it X now, right? This is very important because the CEO is actually building a personal brand. You can see the same thing with Elon Musk and Tesla. Building a personal brand and having a CEO that has a strong personality, a strong presence online is actually a really big benefit for SoFi.
I 100% agree with Henry here. Elon Musk gets tens of billions of dollars of free advertising and marketing for his cars every single year. And those tens of billions of dollars of free publicity and free marketing is money that's going to go back into shareholders' pockets. If Anthony Noto can get 5% of the free marketing that Elon Musk can get, then he can save shareholders over $100 million a year.
Social media for SoFi is really positive right now. The stock market doesn't just go up because of fundamentals or technicals. It goes up because investors are buying it. More investors are talking about it, and there's social velocity. This is a very important factor.
I agree with that as well.
SoFi, what I want to show you in the summary is this is a $16 billion market cap. This stock can absolutely double to a $32 billion market cap. That's not that hard because this is a smaller cap company. This is actually a medium cap company, but
I definitely agree. If you look at something like JP Morgan, which probably has a market cap of $300 billion, if SoFi doubles from 16 to 32 billion, it's still going to be a relatively small player in the space.
It's much smaller compared to some of the big, huge companies that are in the space, right? Like the older, more traditional banks. So SoFi, what makes it really unique is it has innovation and is disrupting the market. It's a mid-sized bank and it has a digital-first tech approach. SoFi is disrupting these banks. They're making these banks look like dinosaurs. And SoFi stock offers a really good risk-to-reward ratio. In the next 1 year, I expect SoFi stock to be a $20 stock. In the next 2 years, I think this can be a $30 stock.
He's basically just guessing. Nobody knows what the future's going to bring. But it's nice to know that he's bullish on the stock.
We're in an AI arms race with China, and the big AI companies, they were crushed. Their market cap went down $500 billion. It's freaking insane, $500 billion. When there's bad news, it is digested quickly. That's what we see happening right now. We see a quick digestion in the market, and as the market goes down, this is still business as usual for me. I'm purchasing on any weakness. I'm dollar cost averaging. This is not a hard market to make money. If you sell puts to get into high quality companies, if you dollar cost average into high quality companies, you're going to see a big rise in 2025. The valuations are going to rise as well because GDP will increase. At the end of the day, companies make more money when their revenues go up. How do revenues go up? When consumers have more money, when businesses have more money. I'm extremely bullish for 2025 because Palantir has been in a huge tear. Palantir stock is like a rocket. It went from $82 per share to over $100 per share, and now we're at over $110 per share. I'm incredibly bullish for Palantir. I think the next stock that we see for Palantir is going to be $150 per share. I'm extremely bullish because the government, they have a lot of taxpayer money, and they're spending it like crazy. The government is not efficient at all. So if you're paying a lot of taxes and you're giving it to the government, at least benefit. Get into a company like Palantir, which is creating a lot of opportunity by taking money back from the government in a way, but they're also really innovating. They have an AI play. They're really fantastic for a data play. If you want to get rich, buy Palantir, hold it. So let's go over the next stock, which is going to be Tesla. Now, Tesla, I'll be honest with you, the stock is under $400 per share. I've covered Tesla a couple of times now, week after week, and I said 400 sell put is the move. Now, Tesla's under $400. So, I'm going to admit what happened. I would not call this a mistake. The truth is, it's been a tough past 2 weeks, but I literally have zero concern. Zero concern. That's because
The issue with Tesla is that the short-term price action is very negative. I do agree with Henry that long-term there should be zero concern, but I think that there are better plays out there. It's possible that Tesla's going to drop below 350. Stock prices often move on emotion as well. If people see that Tesla is down over 20% from its 52-week high, if it continues to fall below 350, maybe it bottoms out at 310 or even 300. What I would do here is wait for Tesla to go up 2 or 3 straight days. If it does that, it likely signifies that the downtrend is over. If it doesn't do that and it continues to go down, then you can buy a call debit spread and finance it by selling some out-of-the-money put options. You can sell a strike price of $260 and use that premium in order to finance the call debit spread. That way you participate in the upside while also reducing risk on the downside, because even if Tesla crashes, you'll then take ownership of shares at $260.
Tesla stock, it's trading for a good valuation. Look at this Bollinger Band. It's at
The issue with relying upon Bollinger Bands is that I've never seen any research that Bollinger Bands are able to predict future price movements. Also, by looking at and relying upon financials, those financials are old news. Oftentimes, they're 3 months old, and they've already been factored into the stock price. Prices tend to be forward-looking. Looking in the rearview mirror is probably not something that is going to be a good usage of your time, especially for companies in the Mag 7, where the pricing on those securities is so efficient.
very bottom of the Bollinger Band. This stock is about to pull up. Yes, this week has been tough. This week we're down like 7% on the week, and it's edging below, as well actually below, the 50-day moving average. Musk told analysts on the Q4 earnings call that in 2025, Tesla will continue to lay the groundwork for an epic 2026 and a ridiculous 2027, 2028, okay? That's based on artificial intelligence, full autonomous vehicle driving, and the Optimus humanoid robot products, according to Elon Musk. So listen, I'm telling you, Elon Musk and Donald Trump, they're like buddy right now. You know,
Yeah,
I'm telling you, a big move is about to happen. They're about to make some big business moves. Things do take time. It's not going to be overnight. Big business moves are going to happen. They are going to have unsupervised full self-driving, or FSD, will come as a paid service in Austin, Texas in June. So get ready for June. It's not that far away. You can buy it now and do a 400 covered call. I think the 400 covered call is a phenomenal idea because while you wait, you can get paid. Let me show you what this looks like. Instead of just waiting on Tesla and being concerned, create income. do a cover call. So for example, if I go to trade Tesla option, you go to sell call right now and you go for before June, don't go into June. I'm telling you, don't go into June. Go before June, all right? If you see the 420 call, this thing is going for $2,800 per contract. You have $50 of upside from the current price of 370 and you get paid $2,800 on top of that.
Yeah, I do agree with that. If you're long shares, then selling the 420, I probably wouldn't go all the way out to May. With something like Tesla, I like to shorten up the expirations, and I would personally prefer to sell cover calls that expire in 1 or 2 weeks. But Henry's recommendation is also very solid.
To Tesla coming down, but mark my words, get ready for June. Our next stock I want to cover is NVIDIA. All right, NVIDIA, I think we have had a good support level. We have hit a floor, so it is time to buy. A lot of people ask me, should I be buying NVIDIA? Absolutely, yes. This stock,
I 100% agree with him as well. You can also look at last Friday's price action, which was very negative, but NVIDIA was up. NVIDIA showed a lot of strength last week, and I agree with Henry here that NVIDIA is a good buy at the 128, 129 price level.
it popped up. This stock went down way too cheap, so forget it. Right now, Microsoft expects.
The other thing is that because NVIDIA has fallen, there's a lot of available premium in the puts. You can buy a call debit spread and purchase the 132 call and sell the 140 call, and then finance that by selling the 115 put options. That would allow you to participate in the upside while also reducing your risk, because in the worst case scenario, you can own NVIDIA at 115.
To spend roughly $80 billion to build out its AI infrastructure this year, okay? And, for example, NVIDIA CEO Jensen Huang, he said that tech leaders will be spending an estimated $2 trillion over the next few years to build out AI data center infrastructure, okay? This opportunity is more than just a potential growth area for NVIDIA. This is actually going to be NVIDIA going to potentially $4 and $5 trillion. And NVIDIA remains the best way to play the AI infrastructure build out. You can even sell 130, sell put for March expiration, because it has amazing juicy premium. And yes, it's actually in the money. I would be selling in the money puts. That's how bullish I am right now on NVIDIA. So in my mind,
I think there are better ways to structure that transaction, but I'm not necessarily against selling it in the money put option.
safe stock to buy. All the mad news has already come in. We already had DeepSeek come in. We had DeepSeek crush the market. NVIDIA went down, and we're already seeing it. Business as usual, baby. Things are coming back, and they're coming back really quick. So I would say that NVIDIA is a no-brainer purchase. I have a lot of NVIDIA shares. So, looking at a company, even like Amazon, they just recently warned investors, same thing as Microsoft. Amazon just warned investors that it could face capacity constraints for its cloud computing division, despite plans to invest $100 billion. So companies are investing $100 billion. They still don't got enough AI. They still need more money for their data centers. They still need more money for, chips to run these AI services and capabilities. So this is really good news for NVIDIA. Now we'll wrap it up with AMD. Look, chip buyers, they want to see more competition amongst AI chip makers, okay? AMD really intends to provide that.
I think overall with AMD, I'm not a fan. It's better to go with a market-leading stock. If you look at a company like Intel, in the 1990s, early 2000s, Intel was a market leader, but now it's not even relevant. I would skip AMD. I don't think it's a bad investment, but I think it's the riskiest long-term investment in this video.
AMD CPUs are already eating into Intel's market share, and now their GPUs are creeping into AI data centers. The upside could be absolutely massive. So the valuation matters, and AMD is trading for a more reasonable valuation multiple than NVIDIA. It's far more reasonable.
But the reason why it's more reasonable is that investors expect that the future growth for AMD is going to be below that of NVIDIA. If you look at every company in the Mag 7, there were always people on CNBC telling you 5, 10, 15 years ago that the valuation for these companies was too high. In reality, these companies grow into their valuations because they're able to grow their companies much faster than their competition.
Again, I am a big believer in NVIDIA, but I can't say that it's cheap. AMD, it's cheap.
Anyway, this is a really good video by Henry. The only thing I disagree with is how he's structuring some of his investments. I think that there are better ways to participate in the upside potential of these investments while also mitigating the downside. If you have any questions, leave a comment below. Subscribe to this channel if you found this video helpful.